Everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to wealth building, commodities, and or financial topics. So let's dive in. Let's see what people are talking about. We'll get right to it. And if you want to follow me, it's at finding_finance. If you want to join our community, finding-value.com, where I dive deeper into these topics. We still have discount coupon code May Day going on, and we've got a 5 p.m. question and answer session on Sunday that we're going to do a little bit of trading on for TradingView if you're interested. So we got Lance here. He says, blue line are the single family housing starts, yellow line are the multifamily housing starts, and the divergence continues. The multifamily has been going down while the single family has been moving up. Last time when we saw the big blow off move in commodities, we saw a big move in single family homes. This is where that money was being lent into the system and that credit being created. So that credit creation puts a lot of things into shortage and is inflationary. And we are still working our way on up into what would be called the winner's curse phase up here, which I don't think we've entered. I think we're still kind of chopping around in the potentially the end of the mid-cycle wobble. And that's all real estate cycle speak. Gold ventures, we said have silver miners versus gold miners. So that's SILJ versus the senior gold mining companies. It says that's what we want to see for a great bull market. We've got a neckline here with an inverted shoulder head shoulder, and we are breaking out where SILJ could outperform GDX. And that's what we see during bull markets of commodities. And this is just further evidence stacking on top of each other that we are entering a commodity bull market is because we are seeing evidence of these silver juniors and junior companies starting to outperform senior companies. Mining visuals, this is silver production for 2023. And Fresnillo is the second largest, and I don't even know what the top one is. Panoles? KGHM, there's a lot of copper mining, zinc mining that's got a lot of silver as well. We've got Pan American Silver Corp up pretty high. Glencore, Southern Copper Corporation, Newmont Corporation. There's a bunch of silver companies that are up there. We've got Mag Silver Corporation there. South 32, which is a diversified mining company, also way up there in producing silver. Coming down, Brandon, he says, we need to mine as much copper in the next 20 to 25 years as we've mined in the last 10,000 years, according to Robert Friedland. And this is what it looks like for copper. This is us from 1900, mining, mining, mining. What is forecasted for demand coming up from 2022 to 2050? It says in 2050, annual copper demand will be greater than all copper consumed from 1900 to 2022. My question is, can we even do this? Can we even produce that amount of copper out of the Earth's crust that we have here? I don't know. And I wonder what price it will be too. But this is a super cycle in copper for sure. And all these charts here that look like this, they go from the left and then they start to grow exponentially. That's our economies growing at some percent gain. That this will be the same chart for oil, the same chart for natural gas, and I don't think electric vehicles are really going to slow it down all that much. And that's where it pays to be a contrarian. You look at all the data and you say, yeah, we can grow renewables, but that's not going to eliminate or reduce our consumption of oil. But the thing is, I don't think we can produce anywhere near where oil demand will be 10 to 20 years from now. I think we're going to squeeze, just like we're going to squeeze on all these commodities. It's going to be a massive super cycle. Producer discipline to be tested soon with the recent nat gas move. So production remains low for now, and this is the lower 48 production in billion cubic feet per day. You can see that we definitely pulled back. He's got 2-1. It's supposed to be 24. We February of 24, we've pulled on back, and we're continuing to pull back in the lower 48 production for nat gas. We've got JSG. It says latest comparative inventory analysis using weekly EIA data. This is for oil price. It says calculated WTI fair value price of $79 in line with the current price. I updated inflation data for last few months, which nudged fair value price up versus last week's. So we're basically at fair value given where the commercial inventory level is at right now. And these are the dot plots that we have. Mike Simonson says inventory of unsold homes is rising across the country, but it's not rising equally everywhere. And demand is plenty healthy in many parts of the country, lots of cash out there. Here's the months of inventory by state. An equal market where you've got an equal buyer and seller's market is about 6 months of inventory. When looking at this, the higher states, the ones that have the most inventory, is 3.5 months in Louisiana. So 3.5 months is still a seller's market. It favors sellers. And that's the one with the most amount of inventory. Then we've got a whole bunch of areas that are in the ones. We've got 1.0, 1.1, 1.2, 1.5. Minnesota's 1.4, Colorado's 1.8, 1.6 on the West Coast, pretty much. So we're probably at on an average nationwide, probably around 2 months of inventory. So 2 months of inventory, that is by far a seller's market. It is not a buyer's market. An equal buyer-seller's market is about 6 months. When you get above 6 months, that's when it becomes a buyer's market. So when you're around 7, 8 months, 9 months, and it's definitely a buyer's market when you hit 10 months or greater. That is probably a recession occurring. So we are still pretty tight in the housing market, and that is a part of the thesis of what drives commodities higher is that credit expansion against new homes being built. It says Rick Rule rhetoric. It says if a company raises 5 million and tells you the money will last 2 years, and they spend it in 9 months, you have to sell. They're either stupid or liars, neither of which are good. I thought that was funny. Josh Young, he says energy and other old economy stocks are undervalued versus the new economy stocks per Bank of America. And this is price to book. In the light blue is the old economy, and these are the metrics that we've got against that. So price to free cash flow, PE, enterprise value to EBITDA, and price to book. And then the dark blue is the new economy, which equals the tech and discretionary and communications. So old economy is definitely cheaper at this time. Here's the big three for this is crude oil, including the SPR, plus gasoline, plus distillates. And you can see that we're at the low end of where we're at in terms of total inventory on the big three. So we've drawn down a lot of inventory if you include strategic petroleum reserves. We're at a very low level. Dow Gold equals 1. It says, I know there's some strong believers in platinum out there. Are we finally getting that long-awaited breakout? I think so. I think we're about to rip it. And watch yields. I think if you watch what yields are doing, that is what could be a driver of platinum and silver really ripping it here. Lower yields and a uninversion of the yield curve would also help too. A bottom is developing for oil in HFI's research opinion, and this is the U.S. implied oil demand for gasoline, distillate, jet fuel, and other oil. And we are moving on up here, just like we've seen in previous years. Around May, we start to move into driving season. The demand is increasing. The big short becomes the big long. We joke about that on the website about the big long. Big short investor Michael Burry piles into physical gold fund, making it his biggest bet. And that is gold generally does well when you get an uninversion of the yield curve and yields fall back down. So maybe that's what Michael Burry is projecting and is basically telling us by positioning the way he is. I do think gold's going to go up, and I do think silver is going to go up, and I do think we're going to see the yield curve uninvert at some point here. Mike says plans to buy a new home have returned to 20% plus levels for the first time in 12 months. Wow, look at this move higher in May of 24. That is a huge move higher for this monthly big ticket spending on a new home. It says plans to buy a new home have returned to greater than 20% levels for the first time in 12 months. It says, do you plan to buy a home or apartment or condo? That is way up there. We've been kind of moving lower. I know yields may have impacted, interest rates may have impacted people buying homes, which impacts affordability, but perhaps people are just going to say, screw it. If I can afford it, let's go do it. So I know a lot of people that are looking for homes right now. So it's looking good. It doesn't look too bad. And that's definitely not a sign of a recession, guys. It says I prefer silver versus gold breaking out from historical lows that go back into the 1940s. This is kind of like almost like a double bottom here with a slingshot. Slingshot is when it pulls back in 2020 like it did. It comes back up, hits the resistance line, and we're breaking through that resistance line. This is silver divided by gold. It's a ratio. And the ratio is about to rip here, where silver could outperform gold. We saw a huge outperformance of silver from 1940s all the way up to the 1970 and also 1980 double top. So this was the big move of silver outperforming gold in the beginning here. And we're right at the bottom again, much like we are in the 1940s. Very similar market conditions as well with fiscal dominance and all sorts of that stuff. And this is the same chart inverted. This is gold to silver ratio breaking to the downside here. That's the way that I view it and the way that I chart it. So it's favorable for silver to outperform. We got Ian here. He says copper versus gold, copper to gold ratio breaking out to the upside where copper could outperform gold. That also might be a signal that the economy is coming back. So we've got mixed data here. Some people think the economy is going to recession and we're slow. Others, like this ratio, are showing us that that may not be the case. Now, here's the thing. The supply demand of copper is pretty jacked up on the supply side. Does that impact its signal for the economy? And it might. It very well might. So generally, if you've got a surplus of copper out in the world and your demand goes up and down, that can change this ratio. But we've got some serious supply side problems on copper, and I also think we've got supply side problems on gold. We, I don't, I'll, I'll hold my judgment on this ratio because of all of the supply side problems. Because now we're really charting the supply side of copper versus the supply side of gold. It's not the demand for copper outperforming gold based off of the market conditions necessarily. I could be wrong on that. Wednesday, we had the EIA report a drawdown in crude oil, Cushing, gasoline, and distillates, about 3 million barrels ish of a deficit last week. We already went over that. So given my current portfolio positioning, this chart is basically porn. I can't say enough how excited I am for the silver squeeze, says Kevin Bamborough. And Tavi's got a chart here. It says, just a friendly reminder that triple tops almost never work. Gold was first, silver looks to be next. We're basically flirting with this $30 level, trying to break out, which is, he says it's not really going to be a triple top. We're going to break through it. So when we break through 30, silver's off and it's running, guys. Platinum's going to follow behind it too. We're all going to run. Coming down, it says Bramer says Europe takes record amount of diesel and gas oil from the Middle East. The US has also emerged as a growing supplier of CPP to Europe. Russian diesel and gas oil exports to Europe are now largely limited to Turkey. The European imports of diesel gas oil are rocketing higher from late 2023, just ripping it. We've got a copper boom, says North Star, and I think everybody kind of understands that. But here's the copper analysis, and look at this breakout here, guys. We are breaking out of copper to the upside. We might slow down a little bit whenever we get to these all-time highs. Sometimes we encounter a little bit of resistance, but the trend is definitely higher. This is US versus China money supply. The pervasive phenomenon of global monetary dilution is a fundamental aspect of today's macro environment. None of us own enough hard assets with all of this money supply growing. And the reason I think hard assets are going to do so well is because they're increasing the N2 money supply at a faster rate than hard assets, which means that we will get inflation. That is what it means. We've got loving this seriously great, very big picture setup, just like silver was. Platinum is also sitting right below a huge blue generational breakout line. And now it is trying to break out. Note that the orange box is a 10-year bottoming consolidation. So it should have some massive energy stored up here now to be released. Even before I called the commodities bear market low and back in 2020, I said platinum will be outperforming gold and silver in the upcoming bull market. Pioneering platinum case on FinTwit. Get ready for the greatest commodity bull market ever. It will be your greatest market opportunity in life. And this is platinum on a linear monthly, a 16-year falling wedge. We have a false breakout on the bottom here, and we are trying to break out to the upside of a 10-year bottoming consolidation pattern. This is going to be a big move, guys. It's going to rocket. I am definitely playing this move with platinum. And here is my boy Platy. I talked about it too. Looking very solid. Of course, silver looking strong too. We're breaking out in platinum to the upside. We also have silver ripping to the upside. Both of these look absolutely fantastic. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Mayday is our coupon code. One word, MAYDAY. We've got a 5 p.m. question and answer session coming up. There is some training on TradingView that we're going to go over in the beginning of that. All right, guys, that's all I've got. We'll catch you next time. This is Finding Value.